All right, everything looking good. We are live. Welcome back to the channel, Crypto Trend Trader, with our midweek market update. It is 8 p.m. Eastern Standard Time on October 19th, 2022. And as always, before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right, everything looking good. Let's go ahead and jump right in. Somebody let me know in the chat. Everything's coming through loud and clear. As always, I would greatly appreciate it. So obviously we saw a little bit of a reversal after the couple-day rally we saw. Again, you guys know, obviously nothing has changed in my opinion. I basically just saw a little bit of a relief rally off of some key support levels. Obviously a couple of things popped off due to earnings. We saw Netflix beat their subscriber estimate by 1 million. They were expecting 1. They ended up with 2. So, that popped up nice little 15% or so there. We saw Tesla obviously saw about a, 5-7% hit, something like that. Continuation of the downside price action based on their earnings as well. Looking very, very unlikely that they're going to hit their targets by the end of the year. So lots going on right now. But essentially, in my opinion, right now, anything but good news is bad news. Everything's bad. There's bunches and bunches of bad. So, as long as we're in a downtrend, we really just expect further downside. So that being said, we know obviously the tag team duo is back in action. So it's no surprise, obviously, that once again, all the people calling for a top in rates are wrong once again. Calling for the Fed pivot, wrong once again. All the people saying that bonds are a great deal and now is the perfect time to buy them up, wrong once again. You got the right idea, but the timing is what really matters. And in the end, same thing we've been saying forever. Once the trend changes, we'll change. But until then, we're not going to sit here and just get wrecked over and over again. I mean, I can't even imagine the accountability of people. The same people have been saying that they're going long and going all in on bonds, for like the last year, or saying they're like shorting the dollar or the dollar's going to zero for like the last like multiple years. I mean, how can you wake up every day and look yourself in the mirror knowing that you're wrong every single day and that all the people listening to you know that you're wrong and then still just pretend like it doesn't matter? Absolutely blows my mind. Blows my mind. You would think after a certain amount of time you would lose all credibility, all, subscribers, followers, whatever it is. But anyway, TNX, new cycle highs. So go figure, it's putting in new cycle highs and it still looks extremely bullish. So, what's likely to happen? Well, probably just going to keep on moving up till we get to 5. As expected, as predicted. Once again, we have cleared another substantial resistance, consolidate on top of it, moving to the upside. Bullish control zone, all green histograms, new cycle high. Obviously, everything very, very bullish. You would have to be a brain dead moron to see anything other than a massive, massive bullish breakout of a descending channel. And if you don't like log scale, or you don't like all the fancy stuff going on here, we can just look at it in, our descending channel here in green instead of the kind of one I had drawn in on log scale. And we can see where it's drawn in here on green. It's just a regular old perfect descending channel on linear scale. And as we get down here, we get rejected at the green resistance, come all the way down to the bottom of the range, come up. Once we break through that resistance, we have gone parabolic. I mean, literally straight up since then. Again, you would have to be brain dead not to see this happening in real time and capitalizing on it. Obviously, now we're up at that 4.12% roughly. And we know it's just a matter of time before we're up here at about 5.12. So another 1% to go. We know, obviously, at this point in time, too, based on the Fed fund futures, that the market is basically pricing in 2 more 75 basis point hikes. So if we're at 4.12 right now and we're expecting 2 more 75 basis point hikes before the end of the year at the next 2 Fed meetings, where's that put us at? About 5.6, something like that. Maybe a little less. Right around our target. So, and then once we're up there at 5.2 and everybody else is talking about how they can't go any higher and everything's breaking and they're crying on live TV and, stop doing their streams and, giving up on everything and, deciding whether or not they want to continue life in this world and how this is just not fair. While all that's going on, we'll be in here talking about the next target to the upside, which is obviously going to be our 382, et cetera, et cetera. Just keep moving to the upside. So, the whole time while everybody else is losing it and, falling apart, Obviously, we've been in front of this, and we're keeping everybody together. So nothing has changed. Yields still crushing it. One half of the tag team, still in full effect. So and while we're talking about it, might as well take a look at the other tag in the DXY here. So we see the DXY basically massive ascending support line right here. Moved up a little bit, had a little bit of a pullback, put in a slightly lower high. Again, everyone calling for the top in the dollar. I just don't see it. Crypto Daddy just not seeing a top yet. There's no signs here of a top. There's signs of a little bit of consolidation. There's signs here of some weakness. We're not going just straight to the moon, but that's far from a top. As far as I'm concerned here, we just went sideways for literally weeks right here. Let the indicator oscillators cool off. We get a hard buy signal, and then where are we at price action wise? We're one candle from the cycle high. The distance from where we're at right now till where we topped out at a couple weeks ago, one candle. Took us one day to get there. So I'm fairly confident that we could get back to that area in one more day. So until we see some actual weakness in the DXY, keep on wishing. Here on the weekly, obviously bullish control zone, extremely, extremely powerful. Rejections to the downside. We do see this one rejection to the upside, of course. You have to trick all the bears. Got to get somebody on the wrong side of the, trade, obviously. And then obviously here on the monthly, just going absolutely parabolic. 821 bull cross to the upside. We see obviously the 200 exponential and simple with a positive slope. Green histogram, blue slope line above the zero. Bullish control zone on the monthly. Stoch's still powerfully angled to the upside. Again, no signs of cooling off. And here we are, obviously been very bullish on this the entire way up. But now we are, $7 from the previous cycle high back in 2001. So, we're $7 away, like 5%, 6% away from the previous cycle high. And we know that that cycle was the second highest peak of all time. So when we start threatening this, then the real threat becomes the global meltdown of, other currencies or other countries' currencies. Now, is it going to get to that? Are we going to get that extreme? Does it have to come to that? No. But, just remember, the dollar is or the DXY, whatever you want to call it, the dollar is a weapon, just like anything else. Just like anything else. So, all right. So we'll just jump back in, pick up where we left off. But very, very important. Just reiterate that, the same people have been wrong about yields and DXY topping for literally, a year plus at this point in time. So, probably just find somebody that actually knows what they're talking about. So that being said, U.S. oil is next. Broke down below the 200 exponential and simple. Got rejected off the 200 exponential. 200 simple has an almost flat slope line at this point in time. We are very, very close to confirming into a bear market. As of now, we do technically still have a higher low, assuming this just turned around and went to the upside right now. But the likelihood tells us that more likely than not, we get rejected here and we're coming back to the downside. We had some hope here for continuation. But here the 821 have crossed bearishly. We have a hard sell signal. We have a bunch of green histograms. We are losing the zero line. Do still have a blue slope line for now, but it does seem very, very likely that oil is headed back down here to retest the lows. And when we get down to those lows at 76, you guys know my macro target is, high 60s, low 70s. I never thought I would agree on the literally anything ever with the Biden administration, but apparently they think that high 70s probably going to be a good place to refill the strategic petroleum reserves. And, honestly, I have to agree. I think it's headed there. So we'll see what happens. But it's manipulation. VIX, the old volatility index for the S&P 500. So we have been obviously tracking this for some time, and it has been trading very, very technically. We had a descending channel right here. We broke out of the channel and started forming this ascending channel right here. We came back down and we now back tested what was resistance this whole way down here as support. And once we back tested it, we found support. We bounced back to the upside. And again, we're just filling out this triangle. There's a couple ways you could have drawn support. Obviously, we broke down through some of those levels. If you've been watching for any amount of time, you know that I've been fairly confident the VIX was headed back up here to test the top of the range. Once again, we're doing that. We're fighting these previous 4 highs right here. Trying to basically take it out. We're back inside of essentially this triangle pattern here, trying to decide which direction we're going to break in. We broke once to the downside. It was unsustainable. We found support at a key level. We're all the way back here at the upside now. So it makes sense. We're going to try to test to the upside. And while we have 4 different points of resistance here, the fact of the matter is it's basically just a cluster of resistance. So one of two things is going to happen. We're either going to hit the cluster and get rejected, or we're going to hit the cluster and break through. And if we break through, we know that's going to be that capitulation in the markets. As we do approach our red zone up here, we know that that level is only reached during extreme volatility, extreme fear. And according to this chart, there's a more than 0% chance that we're in fact headed that direction. So, I mean, we're trading at 30 right now. Volatility, like, that's not normal. That's not normal. You know, statistically, you want to see an average closer to like 20 or something like that. When you're up at like the 30 level, the rule of thumb is that you're expecting essentially like a almost 2% move daily in the S&P 500. I mean, that is insanity. Like, it's great, don't get me wrong, volatility is definitely our friend, but you know, to be essentially averaging a 2% move per day in major indices, absolutely insane. I mean, clearly a bear market, obviously, but you know, it depends who you ask. We might still just be consolidating. Dow Jones on the daily, multiple green histograms, did display some bullish divergence, had a nice little pop up here, trying to maintain the 821 bull cross, so we can get a push back up here to retest the 200 exponential and simple. Daily doesn't look terrible, honestly, on the Dow, but when we really zoom out here and we look at the weekly, what happened? We lost the 200s. We're back testing, trying to hold them as support. As of now, the 8 is acting as resistance. If we clear that, the 21's our target at about 31,288. If we do not, and we continue to get rejected on the weekly by the 8 right here, we're likely headed back down to the bottom of the range, as the 200's probably not going to hold up. Does look okay for now that we reclaim these levels. It's definitely a start. You know, there is potential here too. While we're on this time frame, there is potential here. We only have 1 green histogram so far. I'd like to see minimum 2 green histograms, but we do have a higher low right here on the weekly chart, and we have a lower low on price action. So there is a possibility for bullish divergence on the weekly chart to start developing over time. But the truth is, what are we doing? We're just consolidating inside of this descending broadening wedge. We come down here to key support, we bounce those levels, and then, you know, eventually test resistance, and of course expect a rejection from there as well. And then of course when we go out to the monthly, I mean, just absolutely brutal. Everything headed to the downside, everything pointing to further bearishness. We essentially just did exactly what we said on the monthly. At the beginning, or the end, I should say, of every single month, I basically give you guys my prediction for what the next monthly candle is going to look like, and go surprise, like, it's, you know, we're pretty much right every time. So we broke down from key support right here. You know, after the clear rejection of the 8 and 21, we broke down and put in new lows. And then, of course, at the beginning of this month, you guys can go back and look, or technically the end of last month, the prediction was that we back tested the previous monthly closes right here at 30,733. We did literally within a couple of dollars, and that's where we're at right now. So more likely than not, in my opinion, we break down through support, and then we back that support. It now acts as resistance. That's an SR flip, and then we head further to the downside. Obviously, we already retested the levels that we had predicted down here, you know, pre-Rona highs, the 382 on the macro, etc. So if we do lose that area, if we come back down here and sweep the lows once again, you know, we have a cluster of support around this level, but more likely than not, we're headed down to like 26,550. So while we did put in a little bit of positive action on these major indices, markets still look like trash. Still look like absolute trash. And the indices look much, much better than individual stocks, mostly. All right, so same thing on the S&P. We had a little bit of bullish divergence on the daily. We obviously have some resistance levels, basically back testing those as we speak. A little bit of momentum building on the short-term time frames. When we flip out to our weekly, we see obviously we have hit the 382 here on the macro from our Rona lows to the highs. Again, very key levels we would expect to find support from. We're basically getting the dead cat bounce that we had discussed, that we had been expecting. We'll see how much further it has, if it has legs to it, or if we're headed down lower, and then we'll try to bounce from another area. Big cluster of support here, both 200s and the 382. So obviously we would expect a bounce. We still have not come down to the pre-Rona highs yet on the S&P though. Definitely a key area to watch there. So, you know, and obviously that's our next target in our slinky theory steps. Very close to building some bullish divergence on the weekly. And then obviously when we zoom out here to the monthly, we see this is the parallel from the 2008 breakdown. And we see we're basically showing like that rounding top. The 821 have crossed bearishly. We're backtesting key Fibonacci levels, backtesting the previous high or about to, and then eventually continuation takes us down potentially to the monthly 200 exponential and 200 simple, which just so happen, of course, to line up with the previous lows from the Rona dump, as well as where the 200 exponential and simple would be on the monthly. You know, roughly around that time, assuming it takes us another, you know, this is like 6 or 8 months away. You know, potential targets down here. Everything very, very bearish, with the exception of the 200s on the monthly. So again, nothing has changed here. We did get a little bit of life. The Dow looks a little better than some of the other major indices. The Qs put in new lows. NASDAQ hit the 0.5. So again, we're seeing a much, much deeper retrace on the Qs Fibonacci wise, but still well off of the 2020 pre-Rona highs right here. So we know where those are at, right around the 618, right around that same level right here. So key level to watch, obviously our next step down about 234. And we see the same thing developing on weekly and monthly charts, just slightly more bearish. Next we have IWN, the small cap trash, aka the old Ruddy, the Russell 2000. Back down here at support once again. We see all of the same signs, slight bullish divergence building on the daily, etc., etc. On the weekly, we see potential to build some bearish divergence, as we basically have the same low right here, and we have potential to put in a higher low on the indicator oscillators. We are below the 200 exponential and simple on the, I might have said monthly, but I meant weekly. Back testing those levels right now, looking like a pretty clear rejection. Keep in mind, we're hanging out at the lows. Many stocks are still literally putting in new lows every single day. Just not the time to get bullish. I know everybody wants to call the bottom. I know everybody wants to be a wizard, but let's be real. You know, the magic 8 ball is a thing for a reason. Okay, I've got it. You don't. You can borrow it, but let's be real. Not everybody's going to pick tops and bottoms. And the truth is, we shouldn't even be doing it anyway. I mean, why waste our dark powers? On the monthly, obviously, bear cross right here, bearish control zone, all red histograms, red slope line below the 0 line. The only thing that's not just disgustingly bearish on this chart is the 200 exponential and simple. And, you know, if you have a Ponzi scheme, obviously like the stock market or something like that, you know, you would expect that to continue on here. And I just want to point out here, as I'm just noticing it myself for the first time, there is, in fact, a small dinosaur on the Russell chart right here. So in case you were wondering, yes, that is a brontosaurus. Do I know where that came from or why TradingView put it there? No, I'm sure it was some stupid ass update that they put in where they just added a dinosaur to the Russell chart. So congratulations, TradingView. You're dumb fucks. All right, so that being said, that is our monthly Russell there. We see nothing has changed. Everything still looks the same. There are no signs of like from any of these major indices. At best, we have some 821 bull crosses on the daily potentially happening. So let's move on to our couple sectors. XLE we're looking at today. Energy, backtesting that high. That was obviously the resistance level. We were expecting the backtest. Very, very important level. That is the 886. That is the previous high right here. And if we take that out, we're coming back up here to retest the highs. Now, the danger is, it does look like we're coming up here to retest these highs. The danger is the 200 simple has crossed above the 200 exponential. And we know there is a high probability that once that happens, the trend is out of energy, but more often than not goes on to make a higher high before the trend rolls over and then fails. So is energy topping out? Seems very likely. Seems very likely, especially with what we're seeing from oil, etc. So, and you're like, that doesn't make any sense. We're going into winter. Why would energy be topping out now? Well, you know, obviously the markets are looking forward, so a lot of stuff is already priced in. Now, it doesn't mean we don't go on to put in that new high, but after that, we'll see what kind of continuation we get. Does not seem like we'll get much, but we'll see. XTN transportation looking like trash. Backtesting key resistance was support, now acting as resistance. Again, struggling to try to get that 821 bull cross. You know, threatening the lows right here, trying to get a little bit of bullishness off of it. Just, you know, honestly, just one more trash sector, in my opinion. SMH, semiconductors, I mean, just complete garbage, continuing to just melt down essentially to new lows. We did make it down here to the 0.5. This is a key level to watch for, obviously. We've been just one after another, you know, hitting our targets, and then getting a reflex rally to our next target, and then breaking down to our next target. So seems like the next probable bullish move would be a backtest of 202. Seems like the next probable bearish move, which would be a retest of the 2020 highs, the pre-Rona highs, lines up perfectly with 618. I'm sure that's just a complete coincidence, and there's no possible way that we'll be headed down to that confluence level. But just in case randomly the bottom is not in and we do see further downside, we'll just put a little box right here. I'm sure there's no way that the price action will come down here and hit it like it does every other box we draw. But, we'll see. Maybe it will. Who knows? XLU is next. Utilities. So obviously utilities came down to key levels. Finding support for now. It's holding up. We did get a breakdown of our long-term channel right here. We did have the same type of channel in the Rona dump right there. Recovered, reclaimed that support level. So if we reclaim the support level, by all means, we could easily continue to the upside. But for right now, whenever you have like a decade-long channel or something like that, and you do break down from it, not necessarily the best time to get bullish. If we did come down here and hit some of these other key levels, like a deeper retracement into the 0.5 or the 618, possibly hit the measure move down here at like $50, then, but I mean, what are we expecting here? Is this going to be another black spawn capitulation event? It's like, well, obviously not, because no one can anticipate a black swan event. Therefore, the charts must be wrong. Or technical analysis is far more powerful than people realize. But I mean, that's just crazy. No way anybody could have predicted the Rona dump right before it happened and made a video about it. No way. XLP, consumer staples. So we're seeing a little divided market in here, consumer staples. Some things are holding up good, other things are holding up poorly. Overall, the index doesn't look particularly great, but there are some strong names inside of it. We did confirm into the bear market. Look, I mean, it's supposed to be a safety sector, printing some bullish divergence right here, trying to build a little bit of momentum. But the truth is, people can say whatever they want, use some bullshit metric that lags or whatever, and or average some things out or whatever. But, the truth is, if you take 10 people and put them in a room, and then you figure out what their average net worth is, sure, you can get a rough average of what their net worth is. But if one of those people says Bill Gates, I mean, your numbers are going to be completely skewed. Everybody's going to look way richer than they are. Or the average, is going to look way higher than it really is because it's skewed by a random billionaire. It's the same thing. It's the same thing with these markets right now. People are talking about the consumer is strong and all this excess savings and all that stuff. But if you legitimately do the breakdown, I guarantee you that those savings, the majority of them, it's like the 90-10 rule. 90% of the assets, or in this case savings, are in the hands of 10% of the people. So, very much giving a skewed perception of the actual conditions of the market, the actual conditions of the consumer. You don't have to be a rocket scientist to figure out that the consumer is weak right now. All right, so on to Tesla. Obviously, so Tesla after hours saw a little move back down here to I think it was 210 or something like that. Did close up here about 222. It's been getting brutalized pretty badly and did just recently put in a new cycle low since the peak. Obviously, that is not good. There's a lot of headwinds right now for Tesla, obviously, with the threat that potentially Elon would have to sell more Tesla stock to buy Twitter. There's lots of just uncertainty. It does look like they're going to miss year-end deliveries. They would have to have a pretty insane quarter. Anything's possible. Elon is a master cook and master manipulator. I'm sure he can figure something out. He can maybe hit his year-end estimates by creating a Matchbox car line and then delivering an extra a couple 100,000 Matchbox cars and then counting that as legitimate car deliveries. I don't know. The guy's pretty fucking clever, so I'm sure he'll figure something out and make tiny little remote control electric cars and then count them towards year-end results. Hey, crazier things have happened with publicly traded companies. So that being said, Tesla just hanging out at the lows, hanging out at the 236. Just a matter of time before we come down here to the 178 level. Now, do we get a bounce from here? Do we get a reaction rally? Does the cult try to push Tesla up one more time? Could go either way. Could go either way. I mean, it's at pretty key support here, so really got to see what the overall malaise of the market is. Microsoft here putting in new lows, nice little bounce off those lows, back testing resistance. We did put in, again, bullish divergence on the daily. Apple is next. Apple down here at support, still have a target far lower at about 116, holding on to the 236, holding on to the key resistance here in yellow, trying to just hang around this level. Maybe gets pushed back up to the 200s, but the truth is it's just a matter of time before the bottom falls out of this. Once we take out this low right here, we're just one step away from that 115 level. And we're still seeing, obviously we've seen quite a drawdown now from Tesla, like 50% off the highs, Google, Meta down like 80% or something. Definitely seeing some stocks get beat up now. Some of these big names get beat up. But this is exactly how it happens. First, all the small caps sell off. Then all the medium caps sell off. Then the big caps sell off. And then what happens? Well, we either come out of the bear market and, start moving back up, or we just go right back through the cycle again. So if you think, oh, well, all these shitty stocks with no earnings, are down 90%. So this is the time to buy. Well, sure, until they take another 90% down, and you're like, well, what about the medium stocks? They're only down 50%. And sure, until they take another 50% down. And you're like, well, what about the best stocks? They can't possibly go down another, 25 to 30%, can they? 100% can. So just be prepared for the next leg down. And, if that doesn't happen, get excited. That's great. Great news if we don't go much, much lower. But if we do, be prepared for it. Obviously, none of this financial advice and match financial advice. These markets are extremely volatile. Please do your own research and trade responsibly. So here we see Meta on the race to zero. It's doing pretty good so far. There are a couple other things like Peloton that are beating it out, but you can't beat every trash company. So that being said, it's obviously come to Zuckerberg's attention that the metaverse is garbage. It's fake. They renamed their company and it's trash. So now they're just basically burning, hundreds of millions of dollars on what looks like it came from like 1990. Congratulations. But it is at support, so we'll see what happens from here. Amazon is next. So hanging on to that 618 for now. Did come almost down here to the lows. We still haven't taken them out yet. That's obviously a very, very key level to watch out for. As long as we're holding out above the 618, maybe we could push back up to the 0.5. But man, this thing is just hanging on by a thread. Again, we do see some bullish divergence right here. Definitely a good sign. Quite a bit of bullish divergence. Quite a few assets at support. In the middle of getting a reaction rally, are we going to see follow through? Or, is this basically just the relief that the market needed before it goes lower? Probably the latter. So Bitcoin on the daily. Got to be careful in these type of situations, as we have basically just been consolidating here for quite some time, or just in like this descending channel, just slowly trending downward. As we're trending downward here on the daily, we see the TDMACD, or I should say as we consolidate sideways, we see the TDMACD starting to flash blue again, as if we're going to begin a bull trend. Have to be very, very careful, as this is a momentum indicator, and we use this over the regular MACD because it does a better job of showing us momentum and trend. And there is no real momentum, or trend from like June until now. So we've been consolidating this range long enough. Short-term moving averages, the TD MACD, a lot of these things can start giving false signals or just oscillating back and forth between buys and sells. So you got to be really careful you don't get chopped up in this region. Obviously, we have a flat support and, lower highs. So the probability is this does, in fact, break to the downside. If we look at a longer time frame, we see this weekly, and obviously we have been consolidating under the 200 exponential for some time. It has a red slope now, bearish. We're below the 200 simple now, and it is almost flat. I mean, it's basically flat. So we're literally a week, 2, 3 weeks away, I don't know, from flipping that red as well and going into our first ever weekly bear market for Bitcoin. We have never in all of existence since the beginning of time, well, like 12 years since Bitcoin was invented, have we ever spent this much time below the 200 simple, or any time below the 200 simple, let alone crossed it bearishly. So again, we're breaking records, motherfuckers, and we're all here to do it together. Congratulations. Hopefully you didn't lose all your money on this momentum occasion. But if you've been hanging around the channel for any amount of time, I'm sure you have done much better than all the plebs out there that are just hodling like Michael the Failure. So that being said, weekly, bunch of green histograms. Price action has gone sideways. So we used a bunch of energy and we have gone nowhere. We're literally at the lowest low, like weekly close. So it looks like, look, I've been talking about the trapdoor, and I know you're like, oh, you talk about the trapdoor. Trapdoor's coming. Where is it? Where's the trapdoor? Well, it might feel like a long time here when you're waiting for it, but it's not going to feel like a long time when it happens because it's going to happen all at once. Everything, everywhere, all at once. On the monthly, very, very bearish. 8 and 21 bear cross. We're at the lows, the lowest low. The last monthly candle was the lowest low of this entire cycle. We're in the bearish control zone. All red histograms below the zero line. Red slope line. 821 bear cross. Everything is bearish. The only saving grace on the Bitcoin monthly chart would be if Bitcoin existed long enough for there to be a 200 exponential or simple moving average, we would still be above it. So congratulations, Bitcoin. In a hypothetical situation, you're not 100% bearish. You're like 90%. You can't really see a bunch going on here, but again, we have this sort of channel, the life cycle, the lows and the highs of our 5-wave structure, and Bitcoin is right here at the bottom of the channel. So one of two things is going to happen. We're either going to find support at the bottom of this channel or somewhere around this area and do the same thing we did, in this bear market right here, and that was our lows, in this bear market here, and that was our lows, the Rona sell-off, and that was our lows, or where we're at right now. Or if that doesn't happen, we're going to fall through the bottom of this, and we're going to take a express trip to Rec City, and I'll be your mayor, and we're headed to 16K, after that 14K, then 10, then 4, then 3, then 1, then 0, probably go negative, okay, like oil. So you'll be paying people to take your Bitcoin. Michael Saylor will come to your house and walk your dog if you promise not to sell your Bitcoin. And by walk your dog, I mean he'll do anything, literally. Ethereum on the daily, hanging on to that support level still. This is literally the do or die level. Now, the beauty for Ethereum, though, that gives it a huge advantage over Bitcoin and the rest of the trash cryptos is that if the trapdoor falls out from here, it falls out and we don't necessarily have to put in a new cycle low, at least right away. I mean, Ethereum will probably go straight to zero, but the first like 22% it drops, it doesn't even take out the low. So that's cool. So expect Ethereum to capitulate 22% really, really quick when the breakdown happens. But then at that point in time, there's a possibility, actually, Ethereum finds support, puts in like a double or quad bottom, whatever, and then, still has some hope. So there's a little hope for Ethereum. We can count on it, though. Next, we have the weekly total crypto market cap. We're officially, it looks like the Bitcoin chart. It's flat right here, about to flip bearish. Everything else, exactly what we said about Bitcoin. Blah, 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 blah. That's the weekly. Bitcoin dominance on the weekly. So we see this is, excuse me, hang on, let me clear my throat real quick. The old frog in the throat trick. Bitcoin dominance on the weekly. This is everything. We have momentum in our favor. We are threatening the zero. Multiple green histograms, leaving the bearish control zone. Hard buy signal. Trying to get back above the 21 so we could potentially cross the 8 and the 21 on the daily back to the upside. Sorry, on the weekly back to the upside. Bitcoin is trying to gain market cap in relation to altcoins. Excuse me. And that includes stablecoins. And then excluding stablecoins. So just Bitcoin versus all the shit coins. And that does include Ethereum. Ethereum is definitely a shit coin. Just in case anyone. I know there's a debate going on right now and it's like, Ethereum's not a shit coin anymore. It's still a shit coin. Okay. Officially, 100%. I talked to Satoshi and he was like, Ethereum's great. I love it. And then Vitalik actually called on the other line. And then we went ahead and three-wayed the call. Okay. And then Vitalik and Satoshi were talking, and I was actually just kind of sitting back listening. And Vitalik admitted it is, in fact, a shitcoin. And Satoshi agreed. Doesn't mean we don't like Ethereum, but, according to Vitalik and Satoshi, it's a shitcoin. So you don't have to take my word for it. But I do have a recording of that conversation. So if you want to hear that, just to verify, I'll dig it up for you guys. But that being said, it is officially a shitcoin. It's a fact. And I think actually if you look on Wikipedia, it does say Ethereum is a shitcoin. regardless of market cap or how big the cult is. So that being said, Bitcoin versus all the shit coins, but not the stable coins. Bitcoin is already gaining. It has already flipped the weekly 821 back bullish again. Could it fail like this? Retest it? Could it burst like this? For sure. I think the next key area to test is around that 56%. So about 11% move for Bitcoin, 12% if it decides to do that. And just in case you're just now tuning in, Ethereum is definitely a shitcoin. There was a phone call earlier, and it's settled for sure. But obviously none of this financial advice. So, don't make any decisions based on what Satoshi or Vitalik said, for that matter, or what I said either. All three of us, not financial advice. All right, so on to gold here. Gold looks like trash. Obviously revisiting the lows literally as we speak. Everybody was like, it's the bottom, gold's going to the moon, blah, 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 blah. Well, we're about to put in brand new lows. So congratulations, gold. I will see you at $1,598, our next target to the downside. Does it have to be 98? No, I just kind of made that up right now. So silver is next. Silver obviously doing very, very good. Got the breakout, pushed to the upside, and then literally capitulated. Got rejected, lost key support levels, and now it's headed down to new lows. We're at 18 still now. You guys know my target on silver is like $12. Still a little ways away. Let's not get too excited, but probably going to be putting in new lows very, very soon. Sorry for all the silver monkey people or whatever you are. GSG is next. GSCI commodity index. A little bit of commodities, a little bit of energy, a little something in the middle. Lower highs and lower lows. We obviously said after we put in this lower high right here, we come down, test the 200s. We have gotten rejected, lost the 200s, close to basically coming down here, and we're going to revisit $20. We'll see what happens when we get there. Probably put in a new low and then back test the 200s. Definitely will be an opportunity for like I would imagine 10 to 15% scalp move in there, depending on how deep this sell-off goes. But after that, probably a bear market. So LNG, Cheniere Energy, just a liquefied natural gas producer. We have a clear ascending, just sort of a broadening wedge right here, or a megaphone pattern. We don't know what's going to happen now, but we know we tagged the top of the pattern 3 times. We tagged the bottom of the pattern 2 times. Seems likely we're coming back down here to either tag the bottom of the pattern and the 200s, or this previous, what was resistance, to act as support once again. It's going to start looking like distribution is taking place here, as we do see some bearish divergence on the chart. We do see some signs of potential topping on longer time frames. Again, we'll have to see. A lot of this probably is priced in. We know there's clear seasonal trends in energy. And obviously, we're seeing what would amount to the pinnacle of one of those trends as we speak. So, obviously if people need things to heat their homes, well, when it's wintertime and those people need the, energy to heat their homes, you would expect energy prices to be more expensive. I mean, it's like that all the time. It seems to like blow people's mind that energy prices fluctuate like seasonally. It's like absolutely insane. I have like family in New York, and they use like nat gas. They get like a giant tank filled up with natural gas, or is it nat gas or propane? I think it's natural gas. Regardless though, they basically get gas filled up, and in the wintertime, if you wait to get this giant tank filled up, it's going to be exponentially more expensive, 20%, 30%, 50%. If you get it a few months earlier, before you actually need it, before people are calling for it, it's substantially cheaper. So it's not like a big surprise that there's like seasonal price adjustments in these things. Very, very strange that we see like high ranking officials and people in important positions of, government, brain dead retards. But it's not really surprising. I don't know. It's like more just like, like, I guess we kind of just get what we deserve. So congratulations, human race. You're one step closer to your own extinction. Mosaic Fertilizer Company is next. Again, same thing. Just another one. Got to really watch out for these energy and like fertilizer / like commodities, all this stuff, because they were, again, a super exciting, fun fad. But like, no one likes commodities. No one gives a shit about commodities. Commodities never go into bull markets. Like, so the fact that right now everybody's so sure that commodities are going to keep going up and all this stuff, I think you're right if we have like a 10 or 20 or 30 or 50 year time horizon. But if we're talking like the next like 6 months or 2 years or whatever, I mean, that it just, we'll see what happens. But seems a little too easy. And we know what happens when everybody's on the same side of the trade. We saw it happen in energy. We're literally taking profits. Everybody else is levering up at the top. And then, of course, we see like a 25% down move in a matter of days. Are we going to always pick the exact top? No. Sometimes things are going to move. Sometimes we'll be looking back at that trade, feeling like we're missing out or whatever. And then as soon as it rolls over, you pat yourself on the back and you get that feeling like, yep, it worked again. Holy shit, I was starting to doubt it there for a minute, but it worked. So, after you see these things work long enough, you still feel some FOMO, but it's more of like a joke, more of you just like, haha, that's funny type thing. You don't feel the same urge like you have to buy the top. And, you're supposed to feel FOMO at the exact top. That's the whole point of the psychology. That's the whole thing of it. Because obviously everyone's kind of feeling the same at the same way. People are buying at the same levels. They're selling at the same levels. They're seeing the same thing on the charts. And if you don't think that the market makers are seeing the exact same things that you are and using them against you, still a Padawan in the trading game. So URNM looking pretty toppy right here. Looking like it's ready to put in its third in a series of lower highs and then come down here, put in some lower lows. Expecting this in the low 50s to high 40s very, very soon. CCJ as well. We saw the capitulation dump. CCJ was obviously lying to us. There was a little bit of a M&A situation right here. Obviously, the market did not like it. Why does the market not like M&A right now? But we see lots of mergers and acquisitions happening, typically like at this stage in the cycle. Well, the reason is that people are not exactly ambitious towards the future. So what they want to see right now with their investments is they want to make sure that people are being responsible with their money. So when you start making like 100 million and $1 billion, mergers and acquisitions in a bear market when there's potentially a lot more downside risk, investors get concerned that essentially you're going to, spend all of your free cash that you have sitting around, use up your war chest too soon, go all in at the beginning of the dip and then end up in a shit position. And there's a reason the market's afraid of that, because that's literally what's happening right now. You can see it with, dumbass people like, the crypto bailout king, Sam Bankman-Fried. He's literally like spending billions of dollars buying up companies or hundreds of millions of dollars buying up companies and then right around like literally spending money out of one hand about how he's got all this extra money and it's better to, prop up crypto and it's better if things don't fail, and essentially centralizing a bunch of these different things. And then here at the other hand, he's raising money, trying to raise another $1 billion so he can do more stuff. So he talks about how he has this massive war chest, but then as he's like spending the war chest, he's raising more money to put into his war chest. So he's either the smartest man alive and completely decentralizing crypto. Oh, I'm sorry. He's decentralizing crypto. So he's turning it from a bunch of smaller businesses and entities and like, the little nodes of the cryptoverse. And then he's just swooping them all up and making it more and more centralized, which is good, right? It's good. And then soon we'll get regulation too, and we'll be super centralized and heavily regulated, and all of our crypto dreams will come true thanks to Sam Bankman-Fried. And I think Michael Saylor probably. He's helping too, I'm sure. And Max Kaiser too, I'm sure. Like for outside people, I think when they're first introduced to Max Kaiser, I think he's definitely like a staple of the community and helps to instill confidence and, just make people feel like, there's something legitimate about this space. There's something about this Max Kaiser guy. He just oozes credibility. Tilray is next. Don't take it to heart, MaxiPad. I know you're listening. Tilray is next. Obviously, pot stocks at the lows, looking like trash. Tilray did get the 821 bull cross here. We do see a bunch of green histograms. Wouldn't get bullish on this just yet. But to tell you the truth, though, I mean, man, how deep? What if we did get another, just like a quick 20% sell-off in crypto and, another 10% in the stock market and all this stuff? What do the pot stocks do? They probably go down another 50%. So, all right. And now let's talk about everybody's favorite. Obviously, I was a massive bull on China, literally like the whole entire fucking bull run. And then obviously, we got pretty bearish on China right around here when everybody else was getting super bullish, and it was going to be all about the emerging markets and the dollar was weak and China was going to be the new reserve currency. And literally since then, China literally as a whole has fucking melted down. It has completely melted down. In this case, Alibaba down 77.7%. So for all the retards out there that have been buying the dip on the way down, congratulations. We just put in a new low today. So you are a fucking loser. So here we are, right again. I mean, I know. It's pretty obnoxious. I can't always be right, can you? No, we're going to be wrong eventually. When does it happen? I don't know. We've been due for a while, so we're just really working out that string of luck. So another 18%, and we will be at all-time lows for Alibaba, which took place back in like 2015. So we have literally, since Alibaba was a publicly traded company, if you bought it on the day, 2014-ish, roughly, right around here, you're underwater on your position. So Alibaba literally went from $85 all the way up to $315, and now it's back down at 71. And the all-time low on Alibaba is like $60. So I guess that's the bottom then, right? I mean, we sold off this much. We can't possibly go any lower. There's no fucking way we could possibly get a lower low again, right? Right? And like you can hear it too in these like interviews and stuff. Like these people get on and you could tell they're just heavily invested in China like fucking morons. And they don't understand how the world works or economics or technical analysis. And they're basically crying. I don't understand what's wrong with China and these governments. And do they want to kill their whole economy? Are they trying to hurt all their own people? And the same thing with the Federal Reserve. I don't know what the Fed doesn't understand. Hundreds of economists and the rates and the non-serviceable debt and the crybaby little bitches. Literally just bleeding their money away. You know what I found is when you're really down on the markets, tears don't wash anything away. They just make you feel dirty. We have key support right here on Baidu. I mean, this thing's in fucking trouble. If we lose $80 on Baidu, it's wreck city in this bitch. And I mean, I say that a lot. I joke around, toot toot, all aboard, wreck city, next stop, Hooverville. But the truth is, that's the truth. That's it. Wreck city is next. I mean, this is it. This is the support for Baidu right here. If it loses this fucking support, this is going to look like the most disgusting Wyckoff type 2 distribution pattern ever in all of existence that we looked at all day today. Okay? This looks absolutely terrible. And it looks like it's on the border of the most disgusting trapdoor meltdown we've ever seen. Because the truth is, if we lose this like $90 level, the next target is $38. It's $38. 38. We're about to literally get cut in half another like 60% after being cut in half. I mean, I say cut in half 60%. That doesn't even fucking make sense. Jesus. After getting cut 74%, we're looking at from where we're at right now. It's down 74%. And the next target to downside we're looking at is 60%, 57.87%. So, if you're like, well, it's already down 75%. I mean, what's going to go down another 75%? Yeah, maybe. Give or take. Disgusting chart. We're below the 8 and 21 of bear cost, and we have just lost the 200 exponential and simple. Literally for the first time in existence in all of history. Now, granted, we don't have a lot of 200 exponential and simple, but you could imagine that they would be like something like this along the way, and that we'd be above them. So now all of a sudden we're not going to be above them. For the first time ever on a monthly chart in the bearish control zone, everything pointing to the downside with an imminent trapdoor. Yeah, might as well buy the dip, right? It's already down 75%, right? I mean, earnings coming up though, so that could be good. See, I'm not all negative. All right, we ripped through these assets today. Definitely trying to keep these shorter. Been doing a much better job at that. Hopefully you guys appreciate it. I know some people do not, but I do plan on supplementing them once again with our static videos. I'm going to be doing like topical static videos where I talk about one specific topic, or I just do technical analysis on like daily, weekly, monthly for like one specific asset or asset class. and then I can put them out and they'll have a little more like staying power. I think sometimes with the daily or the live streams, people feel like if they don't catch it right on the spot, it's no longer irrelevant, which kind of makes sense. But we do a lot of longer term stuff here too. So what's going on, Parag? Good to see you. Appreciate that. Can we cover Chinese stocks today if you get a chance? Baba, Neo, Tencent. Yeah, of course, man. I guess great minds think alike. So we did Baba, what'd you say? Neo and Tencent? Yeah, for sure. Yeah, I was actually laughing at Neo earlier today because I remember the comments that I was getting from people when I was calling for $8 Neo. All right, so here is Neo. So again, literally today, putting in brand new lows. Congratulations, you are the lowest low. And obviously we've talked about this level quite a bit. There's some key support right here, that previous peak, and then we have a cluster of support right here. So if we do break down from this support level, and sorry, this chart has not been updated for a while. This is what a chart should look like, okay? You draw a bunch of shit, and then you draw a bunch of stuff in advance, and then you don't even have to like bring the chart up for a while, and then all you have to do is be like, oh look, let me just move this over here, and it hit our targets. Congratulations. Literally did what we expected. So we know when we came down here and tested the 382 again, that once we break through the 382 as expected, because we already back tested the 236, we would then expect to come down to the 0.5. You guys know my macro target from literally way back here months ago has been down here at like the high eights. So we're almost there now. I know it was crazy when I was calling for high eights when we were at $60, but remember what I said back here. It wasn't that long ago that we were at like, $1 to $4, and this thing was like bankrupt. So it's not crazy to think we're going to get a 50% retracement. We also talked about the potential possibility. It has been a while since we've looked at this one, where we need to actually be fibbing from right here. So the way I have this chart drawn out is obviously hypothetical. But what I'm thinking is happening right now is I'm thinking there's a 1 right here, a 2 retracement, 61.8% retracement. Then we're in the middle of the 3, or we just finished the 3, and then we're in the middle of the 4, which is the retracement of the 3. Now that puts us at the 0.5, headed down to the 618, which gives us that like 789 to like 850 target. So somewhere around like low, I guess high 7s, low 8s or mid 8s. But the fact of the matter is, it's possible we're retracing this whole wave and that you could pull like a 5-wave kind of situation out of this. To me, it looks pretty clearly like a 1, a 2, a 3, and then we're in the middle of 4. That just seems like what's happening to me. Doesn't have to be correct. The difference is whether we're fibbing from right here at like $2 or down here at like $1. Doesn't move the targets drastically. You can see right here, just focus on where that blue box is at. And then when we move it up here and where the 0.5 is at, when we move it up here, it shifts the 0.5 up, but it doesn't necessarily change the level of the 618. It just changes it from the 0.5 to the 618. Still the same rough target, which is great because we could be right and it still hits our target, or we could be wrong and it still hits our target. But either way, it hits our target. So once we get there, the next move will be potentially like trying to play, from the $8 to $12 range, from 8 back to 12, et cetera, et cetera. Clear downtrend. No surprises here. Obviously, substantially lower price targets, for everything China right now. I mean, you guys know. I mean, we've been out of China for everything forever. We took that EDU scalp not that long ago. That was a beautiful, beautiful trade. Congratulations to anybody that got in that one. But even that, we took profits at like 25 or 26. And since then, I mean, that's been holding up much better, but even that's down quite a bit. And BDU, all of the education stuff. So that being said, obviously on the monthly, Neo backtesting that key level. This is disgusting though. I mean, this is the most bearish candle we've gotten yet. I mean, if you look at this and look at the, actual size of this bearish candle right here, this big red candle, we don't have anything even close to that this whole downtrend. So we're getting accelerating selling to the downside, which means one of two things. There's either a capitulation event happening right now, and maybe we're close to the bottom, or just the selling is picking up, and we're just going to continue seeing probably the bloody waterfall on the horizon. So get ready for that blood moon. China's in trouble. China is in trouble. But, you know, obviously, you guys have been following the channel for any amount of time. I'm just looking at China and saying, okay, it's probably a couple months just ahead of everybody else, and just most asset classes going to look like that if they don't already. So China in the middle of its new leg down. USA trying to hold on, trying to stall. You know, same thing with the British pound. We saw that trying to hold on, trying to stall. Same thing with the, you know, inverse DXY. We saw it kind of stalling. I would just be really, really careful coming in here trying to call for reversals right now because, you know, the likelihood that whatever percent, whatever stock or crypto you're looking at right now is getting ready to just do the exact same thing again, I wouldn't be surprised. Trapdoor looming. You can just feel in the pit of your stomach the trapdoor, and it's like you can just hear that clicking, and you don't know which click it's going to be, but in a second, you know, gravity is going to start affecting you and your portfolio substantially. So obviously none of this financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. Appreciate everybody tuning in today. Going to go ahead and wrap it up there with the 1 hour stream. Definitely shooting for like the 1 hour to an hour and a half. If you do have requests, make sure to either leave them on a comment video, catch me at the beginning of the stream and put them in, or whatever. Always glad to take a look at those, particularly for the group members. But as always, going to wrap it up there. It is Wednesday, 8:57 p.m. Eastern Standard Time on 10/19/2022. And make sure to check us out for our Friday morning market wrap-up, 11 a.m. Eastern Standard Time, and then every Sunday and Wednesday from 8 until 9 p.m. Eastern Standard Time. But that's it for today, Crypto Trend Trader, and I'm out of here. Remember, this is not financial advice. I'm not your financial advisor. Markets are extremely volatile. Please do your own research and trade responsibly. Have a good night.